Have you ever heard of the Bitcoin halving and wondered what the heck it is and why people seem to think it's so important? Well, let's make it way simpler and I'll show you exactly why it matters. I'm Brett at CryptoGX, and in this video, I'll unpack what the halving is, why cutting supply shakes the price, and how the typical 4-phase cycle tends to unfold so that you can really ride the waves instead of losing everything. A Bitcoin halving is a built-in event within the code of Bitcoin that halves the block reward, cutting it in half every 210,000 blocks, which is roughly once every 4 years. Now, there's a few different terms that you're going to want to know within this crypto world and Bitcoin specifically. So a block is a batch of transactions written to the Bitcoin ledger every roughly 10 minutes. A miner, if you're not familiar, is a computer that is racing to add a block to the ledger and earn Bitcoin. It's processing algorithms in order to do that. Now, miners are running these algorithms and, buying all this computing power in order to earn a block reward. This is the brand new Bitcoins that are, being minted onto the blockchain. It's the only new Bitcoin that will ever come up until there is a cap. So the next thing we'll talk about is supply cap. This means the maximum number of Bitcoins, which is 21 million. Now, this halving throttles the kind of tap that is pushing out the Bitcoin over time. So we get there very predictably, but also on a slower time frame over time, because every 4 years, the kind of faucet is getting closed a little bit and less Bitcoin is coming out. So over time, that curve of how much is earned is logarithmic. It becomes less and less, and that drives the price movement. But we'll get into that. So the kind of timeline of the changes of these halvings and the rewards that are earned. Before November of 2012, the block reward was 50 Bitcoin. After November of 2012, it went down to 25. In half again on July 16, it went down from 25 to 12.5. In May of 2020, it went down from 12.5 to 6.25 Bitcoin. And then most recently in April of 2024, it went from 6.25 to 3.125 Bitcoin per block. Now, on those dates of the halving, the prices also had a change, essentially. In 2012, the price of Bitcoin was $12. In 2016, the price was $650. 2020, it was $8,800, roughly. And then in 2024, it was $65,000, roughly. Now, notice there are very exponential stair steps when it comes to the price here. Every time there's a new halving, this is essentially cutting Bitcoin's annual inflation in half. After 2024, it dipped below 1%, which is tighter than gold's roughly 1.7% new supply rate. And with this in mind, scarcity is in Bitcoin by design. That's kind of the secret sauce to the increasing value over time. Now, essentially what I mean by that is when you slash the new supply while the demand stays at the same level or it climbs, then price usually rises. And this is kind of intrinsic to the pricing model of gold, and that's why Bitcoin is very often compared to digital gold. Now, the block reward is that now currently 3.125 number, and the block reward is just for each block, which is roughly every 10 minutes. So there is a different number of Bitcoin that are issued every single day. The 2024 halving instantly reduced the daily issuance from about 900 Bitcoin to about 450 Bitcoin. Now, on the other hand, US spot Bitcoin ETFs have been soaking up about 600 plus Bitcoin per day, which means that funds are now taking in or having interest in buying more coins than miners are able to create. So the demand is outweighing the supply. When the buyers are typically outweighing the sellers by such a big margin, the people that are positive towards Bitcoin or think the price is going to go up and investing in that way are typically going to win. But all of this isn't just math. It's also hype psychology. If you look at Google Trends, TikTok clips, and headline stories, they spike into every halving as well. First-time buyers will typically pour in because of this hype. A lot of veterans in the crypto space are going to kind of dust off their price targets, and a hashtag like Bitcoin halving will trend for weeks and weeks and weeks. All of this speculative energy often front runs the event of buy the rumor. Then right after the halving, short-term traders sometimes will realize their gains and use the sell the news tactic, causing a lot of choppy sideways action. In this time frame, miners will feel the pain immediately. Revenue cuts in half, forcing their outdated rigs offline. Hash rate often dips for weeks, which is basically the amount of computing power on the Bitcoin network. After that, it will rebound as the kind of miner operators will upgrade their equipment and find cheaper power. Network difficulty also auto adjusts, so the security will stay intact. Think of this as Bitcoin's periodic economic purge of weak hardware. Every cycle ends with a stronger and leaner mining fleet. After a bear market, Bitcoin drifts sideways while people who believe in Bitcoin are quietly stacking more Bitcoin. About a year before the halving, momentum returns. In 2023, Bitcoin tripled from $16,000 lows and even printed new all-time highs in March of 2024, which is 40 days before the halving, something not common in prior cycles. So when the big day arrives that the block reward gets cut in half, the price often kind of is a little shaky. Right after the 2024 cut, Bitcoin slid down about 11% over the following 10 days. In 2020, the price dipped under $9,000 before regaining its momentum. Patience is really what matters here right when the block reward is getting cut in half. The market is just starting to digest the new economics of Bitcoin. So once the inventory or supply starts to tighten and people really get a grasp of this, that's when the kind of rocket boosters ignite, as they would say. In 2012, Bitcoin went from $12 to about $1,100, which was a 90x return. 2016 to 2017, it went from about $650 to $19,000, which is about a 30x return. And in 2020 to 2021, it went from about $8,800 to $69,000 roughly, which was an 8x return. And as you can see here, the gains for each cycle are smaller and smaller over time. Now, the cycle math shows that bull peaks typically land somewhere between 518 to 546 days, which is about 18 months after the halving. During this phase, FOMO ramps, mainstream TV airs Bitcoin segments, and altcoins start to just explode. Eventually, leverage snaps and big holders will cash out. Prices have dropped after their peak 70 to 80%, from 19,000-ish to about 3,000 in 2018, from about 69,000 to 16,000 in 2022. And then after this, there is called a crypto winter or a reset. With all of the excitement gone, prices flatten out. Builders keep building, hodlers keep accumulating. This usually lasts about a year or two until kind of whispers start of the next halving, which restarts the cycle. So which phase are we currently in? It's, arguable that we're in the kind of bull run phase entirely. There was a lot of chop for a while in that week or so after the halving earlier. November 2024 hit and there was this huge spike and some sideways. Now we're seeing another huge spike. So we are in the thick of the bull cycle. Obviously supply is tightening. ETFs are relentless and have tons of buyers pumping in money to Bitcoin, and central banks are kind of tilting towards Bitcoin as well. On forex.com, as you can see here, they're floating a price target of about $130,000 plus. And the main reason that they're using this particular price target is kind of based on past patterns, past signals, and estimating a repeat based on all these logarithmic trends. Now, based on these typical timelines, Reddit's cycle spreadsheet projects a peak window of somewhere between September to October of 2025, somewhere above 130,000. Some people are even calling for $200,000 for the price target. But all of this together and considered, there's still risks. We could see harsher regulations, even though the current administration, the current president's office is probably not headed that way. There could be macroeconomic shocks. Obviously, the economy's in a weird place, or, an energy crisis could dampen returns and have miners less able to be producing more Bitcoin. We don't really know. But after 4 halvings, the scoreboard is really telling us that we're going to have higher lows and higher highs and a stronger network. So with all this together, we got to consider a few key metrics when it comes to understanding Bitcoin itself. The first one is going to be hash rate. This has to do with healthy miners and the secure network. You can find different charts with the hash rate online available. This is obviously the number of terahashes per second the Bitcoin network is performing. It's the power going into the Bitcoin network, essentially. And if you take a look at this when it comes to the timing of halvings, the hash rate typically hits record highs months after each halving. You can see charts of this on websites like Glassnode or here on CryptoQuant. And you've got here in blue the exchange reserve, and then in gray the price of Bitcoin. And obviously we see back in about September there was a huge divergence that, or at least now has become a huge divergence in the two. And as I mentioned, this is hinting at the amount of supply that is leaving exchanges to go into long-term holding. So the next thing to consider is ETF flows versus miner issuance. And essentially what I mean here is the amount of money going into Bitcoin, trying to buy Bitcoin on ETFs versus the amount of Bitcoin that are mined per day. And currently the amount that is, expressing interest in Bitcoin on ETFs is about 600 Bitcoin per day, and miners are generating about 450 Bitcoin per day. So if that is the case, typically it is going to be a bullish sign. And the last one I want to stress here is the cycle clock. As I mentioned here from the Reddit page of past cycles, cycles, use this sheet and kind of the 518-day rule to mark your calendar for at least the minimum of where you might expect the peak to be in. And it can extend up to, 540-ish, 550-ish days. Typically the cycles get a bit longer each time. So this is at least just where you want to start keeping an eye on the price. So riding this 4-year wave of Bitcoin's halving isn't really just superstition. It's coded in the scarcity of Bitcoin. Since 2012, every halving has lit a fuse. Hype builds, the tap tightens, the supply tightens, the price explodes, excess is burned off, and then the crypto winter comes in and cools the frenzy. Grasping this rhythm will really help any newcomers to dodge the panic when it's, when you're seeing lows or drops, and then manage the heightened emotions and mania when the Bitcoin price is flying. Now, are we going to see a huge blow off at the end of this particular cycle? Well, let's look at some fundamentals. We've got under 1% inflation of Bitcoin. We've got the ETF drains. We've got global adoption. So it looks really supportive. Could black swans wreck the entire script? That always happens. Basically, could some cataclysmic event happen and ruin our price targets? That's possible. But the safest stance is awareness. Know the different phases, size your positions for drawdowns, and remember that the cycle turns slower than your, TikTok hype will suggest. So next time somebody is talking bad about Bitcoin and saying that, it's just going to go to zero or just going to, go down, just be happy and understand that you know how the cycle works. You know why the price is dipping so much rather than feeding into that kind of emotional state that most people are going to be looking at Bitcoin with. Now, if you're ready to get Bitcoin or any other crypto of your own, I put links in the description for Coinbase and crypto.com where you get $50 at least in crypto just for signing up with those links. And if you're interested in getting into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit that like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.